Hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. I'm going to try and get you what you need to know before you go, and that starts out with talking about the economic data, see how that impacts the overall markets, sprinkle in some geopolitical fodder, see how that rounds off the assumption of directional moves in the markets, and then talk about some options trades that I'm implementing into my portfolio. All right, so let's get on with the economic data. Now, remember, we were talking about this is a pretty heavy week heading into Friday, which is the unemployment Friday, first Friday of the month, where we get our unemployment data. But before that, we get some other data on the manufacturing side. We got wholesale inventories that jacked up a little bit, 2.1%, expected to be 1.3%. Now, I don't know if this is a product of right now the manufacturing sector picking up, building up inventory, and folks are buying that. Now, we are heading into the summer session, so I wouldn't really expect the manufacturing sector to be ramping up. It's not really a time that we see a lot of manufacturing happening. So with this build in inventory, we're going to have to keep an eye on this one because it tells me consumers aren't buying at the rate that we would expect with the manufacturing going the way it is. Now, another aspect of this is, remember, we talked about this early on in not the pandemic, but early on in around Christmas, where we were talking about flying product into the United States because of the backlog of shipping containers off the ports. Well, that product is now making it here onto the shore and being offloaded. That stuff that didn't make it here for Christmas. And we talked about there's going to be a lot of inventory because they expected that to make it here, not make it. And now when it hits the stores, I guess, if you will, we're going to see this inventory build. That's more of a product of what I see happening here. So what happens next? If we continue to see these build, we're going to start to see the prices come off as they have to lower prices to move that inventory for the new stuff that's coming in. So that's going to be something I'm going to be really focused on going forward here. And then we also got some importer prices from Germany. They did not increase at all. It came in at 1.3%, expected to be 1.5%. So not really seeing that wage inflation there that we would probably normally expect here around these higher prices. All right, so with that said, let's get on. The rest of the week, we do have a lot of stuff to go over, so we'll get on with that a little bit later on. But let's talk about the markets now. We've got right now crude oil coming off, teetering on that $100 a barrel. Now, are we going to be able to break that? It's lining up with that 50-day simple moving average. I think everybody is already tired of these high gas prices, and I talk about it. It is a thorn in the side of the economy because it really starts to cause a recession, if you will, because people can't spend the money in the economy, and that creates that velocity of money. So once that kind of ebbs, then we start seeing the economy overall slow. That's why I always talk about lower gas prices helps spur the economy because of that velocity of money increasing. We got bonds trying to make a little bit of a bottom here. I think it's just that they just sold off so fast that there's just a bottom here. I don't think that there's much room for the upside here going forward in the bonds. We might come back up and test this 153 if something really starts getting funky in the economy. So there might be a bit of a dead cat bounce come and test some key levels, but overall it is still on a higher interest rate environment going forward. As a matter of fact, when we heard Powell originally talking, he started talking about 25s. They went 25 at the last meeting, but now they're starting to talk about the 50s. So maybe getting us used to getting us fighter ready, if you will, by raising slow and then giving us the expectation of higher rates moving forward. But at the end of that means that bonds cannot really go higher because remember, they are inversely rated. If interest rates go up, that means the bond price goes down. That's what's reflective in your portfolio, folks. And that's why you need to do covered calls against those bonds. All right. Gold continuing to slide and not even finding any type of support in and around that all-time high we talked about of 1923. That just kind of peeled right through. What we found support on was a 50-day simple moving average here. So again, a bit of a topping pattern. It looks like gold is going to struggle to keep above that 2,000 mark anytime soon. So I wouldn't necessarily see us really making our way back up there and staying. Bitcoin trying to make a move, but that topping pattern as of today, not looking too great. VIX coming off because we're seeing the equities rip to the upside. Yesterday, totally tearing apart the topping pattern we talked about around that point of control. I said, hey, you probably can't really rely on this topping pattern right now because of that point of control. Anything could happen. We got that bit of a move back up to this 2018 trend channel here that I drew in there. It's still coming to fruition here, folks. So keep your eye on that. It has acted as support and resistance several times, and I'd expect it to play through going forward as well. All right, Dow Jones Industrial Average moving higher. This is the one that I would be looking to cover calls in if I had stuff in my portfolio, IBMs, Caterpillars, things like that. That's something that I would be looking at covered calls for these Dow Jones products, because I think the Dow Jones products just aren't going to make that incremental move higher there. We might go up and test those all-time highs, but I've showed time and time again, folks, when we're using covered calls, what the right strike location is, what kind of volatility we need, the environment, pricing, all of that stuff. So please check that out. I just don't have enough time to give it justice in these market commentaries, but covered calls in an environment that we're going through right now is something everybody should really be considering as far as I'm concerned. You know, I'm a little bit biased though. All right. So, because I love options. Anyway, E-mini S&P is moving higher here, breaking outside of the value area. Now, I would expect them to slow down in relation to something like the NASDAQ making the upward incremental paces over something like E-mini S&Ps. They made this move based on the pullbacks in the rest of the equities. Now we're starting to see E-mini S&Ps start to make that move higher. Well, I think it's going to struggle a little bit as folks are going to probably be throwing money towards the NASDAQ. Tesla, we saw make some big moves yesterday just on that split. Or not on the split, but on the announcement of a possible split. Anyway, E-mini S&Ps making their moves higher here on the day. But we can see overnight strength hasn't waned at all. So we're going to have to wait for some talking heads to really throw a wrench in the cogs of this momentum moving to the upside right now. So with that said, maybe lay off some of the covered calls on the rips. But when we get a little bit long in the tooth this week, we get another big day up, and maybe tomorrow would be then the day to start looking at covered calls. Because, you know, a few days in a row of massive moves just after we all were kind of a little bit leery about the overall economy and what's going on with Russia and Ukraine and China and Taiwan. All of those things are still very in the limelight, if you will, of what traders are looking at. All right, so let's talk about my trades. Now, remember, we've talked about this time and time again where we were lowering overall cost basis on trades. Well, this is one of those trades where I practice what I preach, to be quite honest. Was looking at selling some puts in there, and I sold some puts in ConocoPhillips at around the 80 strike, at the 80 strike, collected a bit of a credit there for that, and then got that stock put to me. Well, I've lowered my overall cost basis on it time and time again. Just recently, if you guys remember, back on March 8th, I went in and did some covered calls in here, sold the 120 calls in the March, sold the March 120 calls for $1.24. Now remember, when I'm long at 80, let's just break it down easy, not even think about all the other times that I've done this, but when I've lowered my overall cost basis, I'm long at 80. That's where I bought it, right? Now I do this covered call. I saw it at 124. You can think of it as a couple of different things. ConocoPhillips pays a nice dividend, but I just paid myself a half a dividend, if you will, actually a 46-cent dividend. So I got a nice dividend on ConocoPhillips by doing this covered call, $1.20. You can look at it as that, as I'm just gaining another form of income based on this underlying. Now, another thing I like to look at it is trying to lower overall cost basis to zero, and that's by selling covered calls. And I sold those at 124, you can lower my overall cost basis now on this trade. So I'm long at $78 and what is that? 76 cents. All right. So lowered my overall cost basis by $1.24. Gives me a little bit more wiggle room. So if that's something that's interesting to you, smash that like button and make sure you're subscribing next to that little bell. I do videos unannounced all the time, so make sure that bell is lit up so you guys can get a notification as when I'm popping in here. So ConocoPhillips covered calls, bought them back for 20 cents, so lowered my overall cost basis literally by $1.04. A little easier to think about it as I lowered my cost basis by $1 there. And then again in Las Vegas Sands, another underlying that I'm long. You guys, I'm kind of got long in these casino stocks. So I'm long pin. I was looking for the reopening trade here, to be quite honest. So with Las Vegas Sands, I'm long at 39. 39. So not really gone anywhere from where I bought it. As a matter of fact, another situation where I got shorts and puts, got this put to me, but it's right at the point of control with my overall lowered cost basis from selling those puts. My break even was right here at the point of control. So I'd be more than happy to get long there, right? Because that's where the market has found or discerned value for Las Vegas Sands. That said, I went in there and started selling some covered calls in it to lower my overall cost basis on this trade that's really just not going anywhere. It's not making me any money on a move higher, right? Long at 39, we're trading right around 39. So going in there and selling some March 45 calls is what I was looking to do. Sold them for 82 cents. I bought those back for, I think it was 17 cents. So lowered my overall cost basis by about 75 cents, let's call it. So got an extra dividend in the meantime, or I just lowered my overall cost basis on this trade, right? Now I'm long at, $78, let's just call it, lowered it by $1. That gets me out of that zone and a little bit lower. So now I've actually gotten long at a lower level than originally. Or you can kind of look at it as if you're an income person, this is another way to gain another income stream. As a matter of fact, I've showed it in parabolic trades where in less than a year when a stock went from $4 to $80, how I lowered my overall cost basis to zero on that trade. Well, we can do that with larger stocks that we keep in our portfolio for 5-10 years. You could lower something that was a $50 stock, $100 stock to zero over the course of that time. So I show you how to do all that with the levers and pulleys of the markets in these videos. So make sure you go to Pro Trader Strategies, check us out, subscribe, hit the bell right next to it. The bell is what gives you notifications as to being unannounced. Spot the trades are one of those things. So webinar on Thursday, we're going to be doing cracking the code to trading options. I'll show you how to figure out when, where, and why we should be buying options or selling options. It's about that easy. If you can't take that, take it easy. Don't forget to hit that like button. Thanks, guys.